Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is a special edition where our focus is on the primary market space. Well, the initial public offering of PKH Ventures will now open for subscription on June 30th and then will continue until June 4th. The company has fixed a price band at 140 to 148 rupees per equity share for this proposed offer. Investors can bid for a minimum of 100 equity shares and then in multiples of those 100 equity shares as well. In total, we are going to see the company raising about 379 odd crore rupees, comprising of both fresh issue as well as offer for sale. Joining in to discuss more insights about this issue and the outlook going forward, Mr. N.P. Sharma, CFO of PKH Ventures, joins right in. Good afternoon, sir, and thank you so much for taking the time out for this discussion. Well, the company is launching its IPO after about 23 years of being incorporated. Help us understand your journey so far. We've seen that you are in various segments that your company operates in. It's in construction, it's in hospitality as well, development, management services. So a whole lot of verticals. We will talk about each of them as well. But so far, how did the journey start and where do you see yourself going forward?
So this is journey of Mr. PKH, this is journey of Mr. Praveen Agarwal, who started his journey at the age of 18 years. Since then, he started his by taking car parking in Bombay area, nearby in the Mumbai airport area. So eventually, when he started his journey by taking the car parking lot at the Mumbai airport area, he ventured into taking all restaurants and managing airports. So
Okay.
at one point of time, we were managing around 15 to 16 airports. So eventually, he next ventured into food segment, and
Sure.
then he
Okay.
then he entered into food segment. And by the name of Golden Chariot and Balaji, we have a very prominent brand, and we have very three hotels by the name of Golden Chariot and one at Vasai in Bombay area, and another one at Tambi Valley at the very scenic location.
Okay.
And we have 5 to 7 restaurants by the name of Golden Chariot and Balaji. And we are also having 4 banquet halls. In the construction vertical, we started our journey in 2014-15. We
Okay.
ventured because of constructing our own hotels. We are especially into the management and the construction of specialized kind of buildings. So we got this experience of art of constructing our hotels into the construction vertical. And our construction arm is Garuda Construction, which came into existence in 2014. In 2016, we got a prestigious product from MHA, Minister of Home Affairs, of constructing of Delhi Police Headquarters. That the project was developed and constructed in 2020-21. And
Okay.
prominently, as of now, we are basically focusing on 2 verticals. One is first one is in hospitality, and second one is in construction.
Okay, understood that. Now you're raising about 379 crores through this issue, of which the fresh issue is likely to be about 270 odd crore rupees and on offer for sale of about 109 crore rupees. Help us understand how will the proceeds be used from the fresh issue. If you could divide that and help us understand how much money will go into which segment and for what purpose?
Of course. So we are coming with 2.56 crores of shares, out of which 1.82 crores share is of fresh equity and 73 lakh is in promoter offering as an offer for sale. So the price band, as you just told on your TV, is 140 to 148 rupees.
Yeah.
The total issue size is 279 crores and 109 crores is basically offer for sale. Out of 270 crores, 124 crores we are asking for our hydropower project, and 80 crores we are asking for our construction vertical arm for as in working capital, long-term
Yeah.
working capital requirement, and 40 crores we are asking for an inorganic growth, uh,
Okay.
and rest is GCP.
Sure. Sure. If you could also break down for all our viewers, what is the current revenue mix currently? You did talk about various segments that you are present in, your food business, the hospitality division where you're owning and operating a lot of hotels as well, boutique hotels especially. You do have the construction, hydropower projects, so several verticals right there. So what is the current revenue mix? And going forward, which are the segments you're going to be driving most revenue out from?
Correct. So our current revenue mix is 67% is basically coming from our construction vertical, and 35% coming from our hospitality vertical. This is basically we are maintaining for past 2 to 3 years. And as of in forward looking, we are in more focusing towards the hospitality sector, whereby we are having around 116 kids, which will be growing around by 60% in the current year itself in 23-24. So, in
Okay.
the future to come, we are focusing on more on the hospitality sector, whereby the revenue will be um on 50-50 basis.
So 50% from construction and 50% from
And
hospitality.
50% from correct.
Okay, so that's
Yes.
going to be your focus going forward. So any particular geographies you're looking at where you would be expanding your hospitality business? Are you going to be acquiring the current hospitals, or are you going to be constructing your own chain? How are things going to progress?
So, ma'am, currently we have three hotels, as I just uh, told you. Right now, we have tendered some government hotels, whereby we have been awarded three hotels in Madhya Pradesh. These
Okay.
are beautiful palatial hotels, and we will be developing and running for just running them. And these hotels are for 90 years, long-term lease for 90 years. So currently, we are not into focusing of develop from the scratch of constructing and
Okay.
developing, and we are basically looking for some good properties from the government tenders. So we have been doing that currently, and out of that, we have been awarded three tenders on that.
Okay. What is your current order book right now, and what is the visibility on that front?
We have current order book of around 500 crores, and the visibility of 20 to 25% jump on year basis.
Okay. We've seen that your margins are pretty strong, especially on the operating level. Your EBITDA margins and your PAT margins look very good. Are these margins, especially on the operating level, sustainable at above 40%, 41% where they are at currently?
No, these margins are looking on the higher side, that because of the annuity which we are receiving through our one of the project from Delhi Police Headquarters, the
Okay.
total operating margin excluding annuity is around 25%. If we add annuity into that, the EBITDA margins rose to that 40% level. So
Okay.
the EBITDA margins on hospitality sector is around 20%, and on construction vertical we are maintaining around 20 to 24 to 25%. And whole and all, if we include the annuity margin into that, that rose to 40%, and that will be sustainable for next 13-14 years.
Okay. Okay. On the revenue and the profit front, what is the visibility that you have? Any particular internal targets that you are going to have for yourself over the next few years?
PKH Ventures for past 20 years, for past 2 decades, they have grown by the CAGR growth of 20%. And we are being focusing on that, maintaining that CAGR growth for next future year also.
Okay, understood that as well. What's going to be your geographical focus going forward? Are you also looking at expanding internationally?
As of now, not yet. We are just focusing more on the as India is booming now. We are more focusing on the geographical good geographical locations of India, like Kerala, Daman, the Maharashtra, and all.
Okay.
So as of now, we are not more focusing on international level.
Okay, got that. When we talk about your revenues, you've been saying that you're growing at 20% CAGR for a long term, and that's what is likely to be sustainable going forward. Could you help us understand, how much is your fixed income currently, and the seasonality factor comes in from the hospitality, since that will be also a key focus area for you going forward. How do you think that will also grow?
For past 2 years, we have been clocking around revenue of around 70 to 80 crores in the hospitality sector, and 125 to 150 crores revenue clocking in the construction vertical. So we are seeing around 15 to 20% jump in both the verticals.
Okay, and that's likely to be sustainable over the next few years?
Yes, we have a very visibility of current order book. We have a three government total in our hand, whereby our keys will be growing from 116 keys by 60% in that. So there will be more visibility in growth in regarding to hospitality sector in the coming years.
Okay, understood that. Well, thank you so much, Mr. Sharma, for being with us on the show and discussing all these insights with all our viewers. All the very best for this
Thank you.
upcoming
Thank you.
IPO, and hope to get in touch with you again once the company gets listed on the exchanges as well. Okay, let's wrap up this special edition right here, but do stay tuned on to Business Today TV to catch all the updates from the world of stock markets as well.
Despite the recent rally, but returns have been sort of lukewarm for Indian equity investors, 10-11% kind of return over a 2-year period, which is a bit subpar. So are you confident that the next couple of years will make up for what has been